Do you know how your credit score is calculated and why it's so important? Welcome to the world of financial literacy, where knowledge is power. And understanding your credit score is like holding the key to a treasure box. Your credit score, a 3-digit number, is more than just a number. It's a quantifiable measure of your financial responsibility. A high score can open doors to numerous opportunities, such as lower interest rates on loans and easier approval for rental houses or apartments. On the flip side, a low score can make these same tasks dauntingly difficult. So, why does this score hold so much importance? It's because it tells lenders how risky it is to lend money to you. Your credit score is like your financial fingerprint, unique to you, reflecting your past behavior with credit. Now that we've scratched the surface, let's dive deeper into understanding what a credit score is. So what exactly is a credit score, I hear you ask? Well, in the simplest of terms, a credit score is a numerical representation that encapsulates your creditworthiness. It's a 3-digit figure, derived from an analysis of your credit history that tells lenders just how risky or safe it is to lend you money. Think of it as your financial grade point average, but instead of grades, it's based on your history with credit. It takes into account factors like how promptly you pay your bills, how much debt you carry, and how long you've been managing credit. This score plays a monumental role when you apply for a loan, a credit card, or even when you're leasing an apartment. Lenders use it to determine whether to approve your application and at what interest rate. Ever wondered how these scores are calculated? Well, let's dive right in. Your credit score is a complex calculation based off of different factors from your credit report. The largest chunk, about 35%, is your payment history. That's right, paying your bills on time is a big deal. Next up is the amount you owe or your debt, which makes up about 30%. This includes credit cards, mortgages, and other loans. The length of your credit history accounts for 15% of your score. The longer you've been a responsible borrower, the better. New credit, which is how often you apply for and open new accounts, represents about 10%. Lastly, your credit mix, or the different types of credit you have, makes up the final 10%. So there you have it, the recipe for your credit score. Understanding this calculation is crucial, but why does it matter so much? Why should you care about your credit score? Now that's a great question. Your credit score is like your financial fingerprint. It tells a story about you to lenders, landlords, and even potential employers. Imagine you're applying for a loan. Your credit score is a key factor in determining whether your application gets the green light. It can also influence the interest rate you'll be offered. Higher credit scores often mean lower interest rates, and that can save you a significant amount of money over time. Now think about renting a home. Landlords often check credit scores to see if potential tenants are likely to pay their rent on time. And did you know some employers check credit scores during the hiring process? That's right, they might consider a good credit score as a sign of responsibility. Even insurance companies often use credit scores to set premium rates. So, you see, maintaining a good credit score can open doors for you in many areas of life. Now that we know why it's important, let's see how you can check your own credit score. Ready to check your credit score? It's simpler than you might think. You have the right to know your credit score, and you can check it annually for free. There are 3 main ways to do this. First, you can go through credit reporting agencies. These organizations compile credit information from various sources and provide comprehensive reports. Examples include Experian, TransUnion, and Equifax. Second, many banks and credit card issuers offer free credit score checks to their customers. You can usually find this feature in your online account or mobile app. Lastly, there are dedicated credit services. These online platforms like Credit Karma allow you to check your score anytime and often provide additional resources to understand your credit. Remember, checking your own score is a soft inquiry and won't hurt your credit. So no worries there. All right, we've checked our score, but what does this number mean? What's a good credit score and what's not? Now that's a question we've all asked at some point. Let's dive into the credit score spectrum to clear the fog. Picture a scale ranging from 300 to 850. This is the credit score range, and where you land on this spectrum can greatly influence your financial journey. On the lower end, a score between 300 and 629 is considered poor. A fair score falls between 630 and 689. Good credit ranges from 690 to 719, and anything from 720 upwards is viewed as excellent. This score impacts your ability to secure loans and the interest rates you'll be offered. Higher scores often lead to more favorable credit terms. Lower scores? Well, they might mean higher interest rates or even loan denials. So we know our score and what it means. But how can we improve it? Let's talk about boosting that credit score. The road to a stellar credit score is paved with good habits. It starts with timely payments. Every bill, every time, on time. This shows lenders that you're reliable and can manage your obligations well. Next, keeping your debt under control is crucial. This doesn't mean you need to be debt-free. Instead, maintaining a reasonable balance and steadily paying it down demonstrates financial responsibility. Another key aspect is the careful management of new accounts. While fresh credit can be tempting, opening multiple accounts in a short period might flag you as a risk to lenders. So, tread carefully. Remember, credit scores are not static. They evolve with your financial behavior. Maintaining consistency in these practices can significantly enhance your creditworthiness over time. Improving your credit score is a journey. Let's wrap it up with some final thoughts. Building credit is like growing a tree. It's not an overnight achievement, but a gradual process that requires consistent nurturing and care. Just as a tree needs water, sunlight, and time to thrive, your credit score needs regular and responsible credit use to grow and flourish. Think of your financial actions as the nutrients for your credit score tree. Paying bills on time, minimizing debt, and being cautious with new accounts are all essential habits to adopt. Remember, every payment you make on time, every debt you pay off, contributes to the health and growth of your credit score tree. However, just as a tree can't grow in a day, your credit score won't skyrocket overnight. It takes time, patience, and consistency. But don't be discouraged. Each step you take, no matter how small, brings you closer to a healthy credit score. Start monitoring and improving your credit score today to unlock your financial future.